What's up traders, welcome to Failure to Displace, where we're going to be utilising some ICT concepts to try and ensure that every day is a payday. In this video we're looking at the Silver Bullet Simplified process just to see what opportunities were available for us to try and extract some profits from the market. Today is June the 23rd, 2023, and we're going to be looking at the Silver Bullet setup in the London session, specifically at the EURUSD Pair. Before we jump into the charts, we need to be aware that we are full of red folder news this morning. This means I haven't traded it. However, coming back in hindsight to look at the Silver Bullet hour, I can see that there was a brilliant setup. So we'll go through the analysis, see if we can learn something. Let's jump into the charts. So I've started marking out my sell side already. We can see we put in the weekly high yesterday. And we've started closing back down again. So we've got some targets for sell side, which would be Wednesday's New York session low and Wednesday's London low as well. And then the weekly low is just below this, which was put in the New York session on Tuesday. We can see in today's price action, price has already been very, very bearish. So we've not threatened the Asia range. Coming into the Silver Bullet hour, let's zoom in on this so we can see. Kind of consolidated through the New York PM session. Asia has broke lower. We've just retested the low of Asia and are now making fair value gaps and displacements, pulling away. Again, an indication that we're onto a sell side program. Lots of big red fair value gaps on the 15-minute chart. So when we're seeing all of these red fair value gaps, these bearish fair value gaps, meaning price is very heavy and likely to be drawing lower. We've got no reason to believe that we're going to get a bullish setup here. We've broken outside this range. We can see that we do have 2 levels of liquidity, 3 levels of liquidity, not far below us. So these are obviously quite strong draws on liquidity now. We're pulling away from the weekly high. So we've put in a weekly high on Thursday. Chances are we're going to be aiming for the weekly low. So this is how I would be viewing this morning. So going into the Silver Bullet session, I'm going to have a bearish bias looking for a displacement lower to effectively try and take out these. Let's jump onto the 1-minute chart. So on the 1 minute we can see what's happened. We've broken underneath the Asia low. We've kind of retested it a few times. Coming into the session we can see that we're pulling away from the low again, leaving fair value gaps on this lower 1 minute time frame as well. Locally we've got a couple of swing highs, so we may come back and test those. However, given the setup, I am trading this as a genuine Silver Bullet, so I'm not going to be waiting for a break of structure for the reversal. I will literally just jump on the first decent displacement candle down to target these lows. So I just want to get in line with this bearish price action, aiming to take advantage of the liquidity that's down below us. So let's start scrolling forward. So I'm ignoring this fair value gap because it was put in before the Silver Bullet hour. So with my trading plan, I'm looking for a displacement to be created inside the Silver Bullet hour. So that would be my first entry. We're respecting that fair value gap. Closing through it now. We've left a bullish fair value gap, which as you say I would have been ignoring because I have no bullish bias here whatsoever. We've left a bearish fair value gap. This is also, which is really nice to see, a balanced price range. We can see that this bearish fair value gap that was created is overlapping this bullish fair value gap. So we've basically got this lack of liquidity going on here. So that is a really strong sign for me to take an entry. I love these balanced price ranges. I would have a 5 pip stop loss, which takes us above this swing high, and I would have a 5 pip take profit. In live time, I'm not sure whether you would trade this because, as I say, we are expecting in literally 6-7 minutes time the news is going to drop. So let's just see what happens here. This is just theoretical. So you tagged in straight away. Bit of a pullback. A little bit worried here because obviously we've closed through the balanced price range and we've left a fair value gap higher. So So I would be panicking a little bit now, just because obviously with the news coming out, literally they can move price anywhere. So you could be on the wrong side of the market. We haven't broken this high. And there we go. That's the news candle. 315. It absolutely dropped. So that was the release of the French PMI on there. So yeah, there was a little bit of drawdown where you would have been worried, especially with this news coming. So as I said, I didn't trade this in live time, but we can see that the bias was correct. So looking at the levels, we were displacing below the Asia low, and naturally we would expect to target liquidity lower down the range when we're unable to pull back. So we have fulfilled our target. It would have been a crazy 3R in a couple of minutes time. Let's just see how far down this drops. Yeah, so we've taken out the New York as well. The weekly low, sorry. So we've smashed through the weekly low. Definitely would have taken profit in full at the weekly low if I was brave enough to try and trade that. Tried it, provided 6R in 4 minutes. Price consolidates and then continues lower. So if you were on this up to live time, you could have ridden a really nice trade all the way down for a potential 13R on that. But as I say, I wouldn't advise, and ICT again doesn't advise to trade the news like that. You would maybe have considered getting in lower down here, but given the fact that we've taken liquidity, I'm not so sure I would have joined in so far down. Where's our next draws on liquidity? So we're into an order block. We've got this big pump, so there is these. There is a serious void of liquidity here, so price actually could fall through this very, very quickly. So we could target this order block here as a sensible place to take profit if you were going to get involved lower down in the price range. But essentially this session is a no-go with all of these red folders. It's not something I'm particularly interested in trading. So thanks for watching. I hope you found that useful. At least we can see that our bias was correct and the failure to displace method does actually hold up, although it would have been a bit of a gamble to take that. Do let me know if you did take that trade in the comments below. It'd be fantastic to hear your feedback and see some success on that one. You guys are gamblers if you did, and I'll be back later on this afternoon with the New York review. Before I disappear, please give the video a thumbs up if you enjoyed the content. Consider subscribing to the channel if you want to see more videos like this one. I'll catch you later.